Hey everyone, welcome back to Corporate Decoder, the place where we try to understand the financial secrets of the companies you care about. Today we're diving into some SEC filings that give us a fascinating look at the financial health and strategy of Cromwell funds. It seems like they're managing a variety of investment funds, and this report covers their semi-annual performance up to June 30, 2025. Let's see what's really going on behind the numbers. Before we dive in, if you appreciate getting straight insights from corporate documents like this, make sure you're subscribed. We also have a fantastic Discord community linked in the description below where we break down these filings in real time. So consider joining us there. Alright, first up, let's check out the Cromwell Trend-Focus Fund, specifically the institutional class. For this period ending June 30, 25, their net assets were a solid $28,028.05. Their net assets were a solid $28. Now looking at their portfolio turnover rate, it's at 30%, which tells us they are actively managing the fund, buying and selling Investify, maximize returns. When we look at who they're investing in the top 10 issuers table, shows us where the big money is. Companies like Talon Energy Corp and Nvidia Corp are among their top holdings. Nvidia, for instance, is a major player in artificial intelligence and tech, so their strong performance here likely boosted the fund. Microsoft Corp and Amazon.com Inc. are also in there, showing a clear focus on technology and large cap companies. Now let's shift gears to the Cromwell Balanced Fund, also the institutional class. Their net assets as of June 30, 2025 were $12,939,725. Their portfolio turnover rate is 28%, which again suggests active management. The security type breakdown shows a significant portion in common stocks at 59.9%, and a decent chunk in US Treasury obligations at 27%. This mix of stocks for growth and bonds for stability is typical for a balanced fund aiming for a mix of income and appreciation. Interestingly, their top holding is United States Treasury notes at 25.7%. This is a very safe bet and provides a stable foundation. Beyond that, we see major tech and energy stocks like Amazon.com Inc., Microsoft Corp, and Talon Energy Corp in their top issuers list. Moving on to the Cromwell Greenspring Mid Cap Fund. For the institutional class, their net assets were quite substantial at $122,374,889. Their portfolio turnover is a very low 2%, indicating a more buy and hold strategy focusing on long-term growth rather than frequent trading. The sector breakdown here is heavily weighted towards industrials at 48.1%. E-CSRS Group Inc., Republic Services Inc., and KBR Inc. are their top issuers. This focus on industrials might be a bet on infrastructure and manufacturing growth, which could be a good strategic move if that sector continues to perform well. Let's look at the Cromwell Long Short Fund, the institutional class. Here net assets are $88,725,815, and the portfolio turnover in $15, and the portfolio turnover is fund being a long short fund, means it can profit from both rising and falling prices, which can be a more complex but potentially rewarding strategy. They also provide a schedule of securities sold short, and this gives us a peek into what they might be betting against. For common stocks, they've shorted companies like Northrop Grumman Corp, Constellation Brands Inc., and various biotechnology firms. Betting against a company is risky and shows their managers have conviction in their negative outlook for those specific businesses. Now for the Cromwell Foresight Global Infrastructure Fund institutional class. Their net assets are $50,339 and a portfolio turnover of 17%. The top 10 issuers are global infrastructure companies like Cellnex Telecom SAD, Equinix Inc., and American Tower Corp, reflecting a focus on infrastructure assets worldwide. The top 10 countries table shows significant exposure to the United States, Canada, and the United Kingdom, for example. Let's circle back to the Cromwell Centre Square Real Estate Fund investor class. Their net assets are $49,372,140 and their portfolio turnover is 15%. Looking at the sector breakdown here, real estate is king, with apartments, warehouses, industrial and storage being major sectors. Their top issuers are companies like American Tower Corp, Equinix Inc. and Welltower Inc. This fund is clearly aiming to tap into the real estate market's potential. Across all these funds, the net assets vary, with the Cromwell Greenspring Mid Cap Fund standing out with over $122 million in net assets. This suggests significant investor confidence in that particular fund strategy. Now, point of analysis from a Warren Buffett perspective. We always look at expenses because they directly eat into your returns. For the Cromwell Centre Square Real Estate Fund investor class, the ratio of expenses to average net assets after reimbursement is 1.12%. For the institutional class, it's a bit lower at 1.02%, as expected with larger investment classes. Similarly, for the long-short fund investor class, it's 2.05% after reimbursement, which is on the higher side for a fund like this, indicating potentially more active management or higher operational costs. The institutional class for long short is 1.80, indicating potential more active management or higher operational costs. The institutional class for long short is 1.80%, also quite high. These expense ratios are crucial for investors to consider, as even a small difference can impact long-term gains significantly given the power of compounding. Looking at the total return for the Cromwell Greenspring Mid-Cap Fund investor class for the period ending June 30, 27%. However, for the same period, the Cromwell Foresight Global Infrastructure Fund institutional class shows a much higher total return of 14.66%. This kind of variation in returns between different funds managed by the same company highlights the importance of understanding each fund's specific investment strategy and risk profile. Overall, these filings show a company managing a diverse portfolio of funds with different strategies and risk exposures. Their focus on technology and real estate in some funds, and a more balanced approach with infrastructure and industrial exposure in others, indicates a strategy to capture growth in various market segments. The higher expense ratios on the long-short funds certainly warrant attention from investors in that particular vehicle. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.